Over the last 2 decades, China has developed into a global economic superpower. China is the only country in the world that has grown at the same rate as it has. But what if I told you that China's entire economic progress was a deception? Cathie Wood, the CEO of Ark Invest, compares China's expansion to Japan's 30-year economic crisis in the early 1990s and the early 2000s. China is currently suffering the largest housing bubble in history, just like Japan's GDP, which was fueled by a real estate boom. I'll go through everything you need to know about how the world is about to wake up to China's impending demise in this video. Welcome back to our Top Tech and Trades channel. China's economy has risen significantly in the last 20 years, with real estate accounting for a significant percentage of that growth. Speculators began buying homes only for the sake of increasing the value of the property. For decades, China's home prices have been steadily rising year after year. Because housing prices continued to rise year after year, the majority of Chinese citizens in cities like Beijing and Shanghai were unable to purchase a conventional house or apartment. Purchasing a home would be the logical next step within easy reach of the cities, but far enough away that the prices are reasonable. Many people did exactly what they were told to do. People began migrating to houses and apartments 10 to 15 miles away, rather than in China's cities. Prices began to rise as a result of the increased demand for residences near cities, causing inhabitants to move even further away from them. Because property developers were confident that this expansion would continue, they began to build houses further and further away from the center of the town. You'll notice something extremely odd. If you drive an hour or two outside of Beijing or Shanghai these days, there are a lot of modern buildings in good shape, but there's one problem. No one is there. This is a testament to China's growing real estate bubble, a significant driver of the country's economy. Take a look at China's most renowned ghost town, Orda's new town. The city has expected to house 1 million people, but that number went down to 300,000 and finally to 100,000 in 2016. These types of empty units are so widespread that the aggregate amount of space can literally house the entire country of Italy. After 20 years of appreciation, the Chinese real estate sector is now worth over $50 trillion. 2 times more than the US and almost 4 times more than China's entire GDP. Loomis Sales, an investment management firm, estimated that 70% of China's entire wealth is in real estate. This is exaggerated by the fact that increasing property prices makes citizens feel the fear of missing out, ultimately forcing citizens to take out dangerous levels of loans. 4 out of top 10 of the most unaffordable cities to purchase housing in are all located in China. We saw this before in America's 2008 recession, and we're seeing similar signs in China. Just like before any financial crisis, greed took the center stage and developers were soon stuck with too much debt to handle. Evergrande is one of the largest real estate developers in the world. By using corporate bonds issued to international investors, Evergrande grew its real estate portfolio to over 565 million square meters of development land. This was only possible because Evergrande took out over $300 billion in debt. Evergrande became the most valuable real estate company in the entire world. This positive sentiment soon began to shift dramatically as investors realized that Evergrande was in major trouble. Credit agencies recently had to categorize Evergrande in default after the company failed to repay $260 million interest payment. International bond holders are now threatening to sue Evergrande in response to its debt crisis, Part of these struggles has to do with President Xi Jinping, who's been attempting to reduce China's dependence on the property sector by reducing the amount of speculation in real estate. The Chinese president's mantra is that homes are for living and not for speculation. President Xi's actions are a threat to China's economic stability. Evergrande may be a large fish in the pond, but it's simply just one of many developers that are defaulting. Chinese real estate developers are currently dropping like flies. For example, Chinese developer Shi Mao recently defaulted on a $101 million interest payment. Another developer named Oceanwide Holdings defaulted on a $175 million loan. A recent exchange actually revealed that a total of 484 companies were overdue on at least 3 commercial payments in the fourth quarter of 2021. Contracted sales for the top 100 real estate development companies were down 35% in December 2021. That marks the first year that development companies saw a decrease in sales in over 20 years, according to Cathie Wood.
Now, one other thing I'd like to focus on here is China. So much is going on in China that, again, the headlines are getting some of this, but within 1 week, a Bloomberg journalist, Sofia Horta Acosta, reported that all of this happened in Greater China this week. I'm going to just read you a few of these to give you a sense of the drama here. Evergrande suspends trading on the stock exchange. And the developer, Evergrande, was ordered, think about this, to demolish 39 illegal buildings because they didn't have the right permits. Can you imagine if that happened in the United States? The 100 largest developers in China reported that their contracted sales were down 35% in December. And for the year as a whole, they fell for the first time, Sophia says, in at least 5 years. I don't think I've ever seen them fall in the last 20 years. So real change. A few of the other developers went bust. Shimao, which was rated investment grade in November, defaulted on a trust product and rocked the credit market. And the central bank withdrew liquidity. A lot of people thought they were going to increase liquidity because they said they would. A China regulator vowed stability after stock market's rocky start, but they haven't done anything about it yet. And very interestingly, the yuan, the RMB, the local currency, after a very strong year, held up. And I think it held up probably helped by the government, supported by the government. It is starting to weaken. Quite a telltale sign. And one stock, Hurong, which had not traded since last March, opened this week and dropped 50%.
The Fed stated that stresses in China's real estate sector could strain the financial system, with possible spillovers to the United States. Many economists assume that China's fast-growing GDP is a sign of economic prosperity. However, a significant portion of that growth has fueled up by humongous debt bubble, not just in real estate, but in China's entire economy. Chinese household debt relative to both income and GDP has increased sizably over the past 2 decades. Household debt is growing disproportionately to GDP. It's true that China's GDP has been growing incredibly quickly, but what's growing even faster is China's debt balance. Another issue that the Fed cited is the stretched real estate valuations and how the Chinese Communist Party's crackdowns could crash those valuations. That statement was in reference to the 3 red lines policy that the Chinese government is implementing on the property sector. The 3 requirements include a liability to asset ratio under 70%, a net debt equity ratio less than 100%, and a cash to short-term debt ratio of 1. Cathie Wood likens the CCP's action to playing with fire because their new policies could burn the whole property sector into ashes. 2/3 of the top 30 Chinese developers have crossed at least one red line. The only way to meet the lines is by selling properties, which is exactly what many developers are trying to do right now. Evergrande is looking to sell the Evergrande Tower, which is the tower that houses its Hong Kong headquarters. Caesar Group Holdings has put 18 of its projects with a combined square footage of 4.7 million square feet on the market. And just like Evergrande, Caesar still hasn't sold any of these projects. The issue with all these properties going on sale is that there aren't any buyers available. This is because all of the other real estate developers are also trying to meet the 3 red line requirements. If there's no buyers for all these property on the market, the only solution would be for Evergrande and Caesar to lower their price. And when those prices are lowered over and over again, the market is going to collapse. Property developing represents 29% of China's total economic output. According to the Federal Reserve, China's upcoming slowdown is not an issue for Chinese citizens, but potentially for people all across the world. The Fed stated that China's economic slowdown could strain global financial markets through the deterioration of risk sentiment, pose risk to global economic growth, and affect the United States. In other words, if the Chinese real estate market crashed, the entire global economy would suffer. Back in the 1980s, Japan was the golden model for growing economies. Economists thought that Japan would eventually overtake the US as the largest world power. News reports show that Japan's theoretical land value was worth 4 times more than all of the land in the US. Other countries in the world envied Japan's quickly growing real GDP, which grew at an average annual rate of 3.89 in the 1980s. After decades of thriving economic growth, Japan was in humongous debt crisis. By 1982, the Japanese stock market was down almost 60% to 15,900. Over the next 2 decades, the Nikkei index dropped an additional 45% on top of the existing 60% fall. Cathie Wood believed China is in a very similar situation. Chinese real estate prices are elevated to new highs that are fueled by a growing debt crisis. The implications of China's impending crash are immensely deflationary. More specifically, China's struggling economy is going to crash commodities to unbelievable lows.
Now, when China catches a cold, commodities usually catch pneumonia. And we're seeing this in a few commodities, iron ore prices and so forth, but it isn't quite clear cut yet. And I was saying to our team this morning, how could this be happening and the economy not be falling apart and the consumer not getting restless there? Well, the consumer savings is 75% in real estate. But what I learned this morning, and it does make sense, one of our analysts, our newest genomics analyst, Pierce, worked in his lab as he was getting his PhD at Texas A&M with other Chinese students. In fact, he only worked with Chinese students. And he learned that a greeting in China, the equivalent of a hello, is basically, I hope you have enough to eat. And so pork prices and rice prices are critically important. And what do we see happening there? Pork prices are down, depending on the measure, 33 to 50%. Rice prices are fairly flat. And apparently that keeps the consumer happy. Now, I don't know. I think this property debacle is quite something, so we shall see.
Chinese property sales fell by over 16% year over year in November, and new home prices fell by 0.3% month over month. A 0.3% month over month decline might not seem like much, but when annualized, that's a 3.6% decline. Chinese housing prices have decelerated to rates not seen since 2015 Chinese economic slowdown. Cathie stated in Ark Invest quarterly report that she anticipates China's GDP will decelerate significantly in the next 3 to 6 months. Iron prices have dropped 35%. The Baltic Freight Dry Index has dropped over 40%. DRAM prices have down 25%, and US timber prices have dropped 33%, according to her. She also stated that some commodity prices are already turning red, even with the price of WTI oil a 12% drop in the last year. The Communist Party of China has acknowledged that the country's economy is deteriorating. The Central Bank of China has just announced a rate drop that will help the economy grow. The real estate market in China is in serious danger, and it's likely to get worse as time goes on. Due to credit tightening and restrictive legislation, the rating agency S&P forecast a 10% drop in residential sales across the country in 2022. No matter where you are watching this video from, that drop will have an impact on you in some way. Let me know what you think of China in the comments section below. This is Top Tech and Trades channel. If you enjoyed this video, hit the like button and subscribe.